Hey, Larry Shover, out in Chicago at the CME Group. Jump in and let's get your thoughts on today's action. A trickle up, a lot of good old American stocks making new highs. What do you make of this action?
Boredom, skepticism, and scorn are still the best words to describe this painful grind up. Nobody believes it. They're thinking, what's underpinning this? Are we going to have some type of credible European response, something we haven't seen since this whole debacle started in 2009? Or something a lot of people aren't talking about. We've just got done falling down a 5-year flight of steps with housing. Maybe we're underestimating the tailwind of a recovering housing market, what that can do for the stock market. I mean, I firmly believe we're going to stick right around here by year end. I would not be surprised to see us go up to 1475, 1500 as there's a wild beta chase going on right now. But next earnings come in play. I can't see us going much higher than we are today at the end of the year.
Interesting. So in other words, we get a breakout above 1420, 1425, and all these hedge fund guys say, wait a minute, I got to make money. I can try to get paid 20% of whatever I make over the next 16 weeks. Right. Kenny Polcari on the floor of the New York Stock Exchange. What kind of names would they be buying? Hedge funders trying to chase returns under that scenario. I
got to tell you, they're going to look at the ones that are really beaten up, right? I think they're really going to look at financials because say what you want, I think the financials are really undervalued, and they're going to, if the market turns around and they push us through 1425, I think financials are going to be one of the big names that they go for. And listen, don't forget, I agree with everything the other guest just said. I think if the market breaks through 1425 and then they start to get good news out of Europe and it looks like they're going to come to a resolution, they're going to come after this market because they're going to have to play catch up.
Hey, Larry Shover, last comment to you. What's your trade for Monday morning, Larry?
My trade for Monday morning is to keep the powder dry. I still think one thing is to keep short the euro. Another thing that a lot of people aren't doing is basically selling the British pound and then buying the euro against it. That carry trade is very, very good right now. It seems like people are overestimating the health of the UK economy. People are selling that and buying the euro. So there's a little bit of a play between currencies right now.
And Tim? Okay, time for your hard hats. We're going to talk Lowe's here. You got earnings out on Monday, and despite improved consumer spending and housing, shares of Lowe's continue to lag competitor Home Depot. Today on 3 versus Trish. Do you add a little home improvement into your portfolio right now? We've got 3 takes for you. On Lowe's with Brian Nagel on the fundamentals, Bill Maloney talking charts, Larry Shover back with us on the options trade. Good to see all you guys. Starting with you, Brian, I want a fundamental perspective here. You say this one's looking good in the long term. What about short term?
Well, look, I think Lowe's is a great way to play what I consider to be a recovering housing environment in the United States. I think Home Depot's probably the better way to play it. The concern I have with Lowe's nearer term is just that the company's undertaken a pretty significant re-merchandising of its stores. I think it's the right thing to do. It's just probably going to cause some near-term disruptions, here in the next few quarters or so.
Some disruptions. Have you been concerned at all about weather patterns and what that's meant for the company?
Yeah, look, I think that's a good point. I think weather's another issue. We saw with Home Depot's results, they reported earlier this week, essentially what happened is you had a very mild winter, so that demand was pulled forward into Q1 from Q2. And then subsequent to that, we had the droughts across a big chunk of the United States. So I think that to some extent hurt demand. So I think Lowe's we'll see that in their results when they report on Monday. These sales effects.
All right, I want to get a technical take here with Bill Maloney. Bill, if you look at Lowe's relative to Home Depot, it's clearly been a disappointment. Do you expect more disappointing performance in the near future?
Well, the charts in Lowe's are just pretty much stuck in neutral. Relative to Home Depot is up about 38% on the year. Lowe's is only up about 11%. So it's been a big disappointment relative to Home Depot. Its long-term uptrend since September, that was broken in May when it cut its guidance for the year. Now it's trading in this sideways pattern. It's got resistance around 29, support probably around 24. It did break above its 200-day moving average yesterday, so that's a positive. But it really needs to break out of that range for the charts to look good on the stock. I mean, in the case of Home Depot, it's at the highest it's been since year 2000, whereas Lowe's is just kind of stuck in this range.
All right, but, as negative as perhaps you two are sounding, I want to go over to Larry. Larry, this is a company that's paid a cash dividend every single quarter since its 1961 inception. Is there any reason to be excited, at least about that?
Absolutely. I think it's really a cause to be excited about that. And I look at the options markets to tell me what to do a lot of times. And right now, there's a lot of bullishness in the market. There's a lot of the skew is very flat right now, which means there's a lot of buyers of calls and sellers of puts. So how do I express my long-term bullish conviction with options? What I would do, I would buy the stock. Last look, you could buy it at $27.60 a share. Go out to January 2014, 590 days away. Sell the $35 call, buy the $23 put. You can do that for $1.30. Now, the downside to this is that you're risking $5.90 to make $7.40. It doesn't sound like a good bet, but keep in mind, you have 6 dividends perhaps coming your way, and you have the benefit of knowing that, hey, if the stock goes below 23, I'm out. The worst I've lost is $5.90.
All right, back to Brian. Fundamentally, though, you're saying that this one is just not as well served as Home Depot. What gets you so excited about Home Depot right now?
Well, look, I want to be clear. I've got an outperform rate on Lowe's, so I'm positive here. It's just I think Home Depot is better positioned at this point.
Why?
Now, well, I think that two things. I mean, one, what I mentioned before. Lowe's has undertaken this pretty significant remerchandising of its stores. Probably the right move for the long term, but near term, it does imply potentially some disruptions. Home Depot, on the other hand, they really adjusted their business model 3 years ago when they built out their new network of distribution centers. And I think that's allowing these distribution centers are now allowing Home Depot to much better manage the flow of product to its stores. So I think as we talked about the weather disruptions we've had recently, Home Depot managed through that really well. I think that was in part a function of this new distribution infrastructure.
Bill, when you compare this to Home Depot, and you and I were talking about this a little bit previously, Home Depot just looks like the better opportunity for investors?
Looks like the much better chart. And what concerns me about Lowe's is that it has this massive double top at around 32, and that goes back to 2007. So even if it does have good numbers, it still has to break above 32, and that to me is the key resistance level long term.
All right, we're going to leave it there. Thanks so much to the whole team. We're going to want to get the cheat sheet for you on Lowe's ahead of earnings, which don't forget are out Monday. You heard Brian saying that this is a company that he considers a long-term buy. He sees the stock heading to $37, I should point out. But, near term, he said there are a lot of concerns, in part because of the weather and how that may have affected sales trends. So Bill Maloney is saying he sees the good and the bad in the charts, but needs a breakout to get positive. He thinks Home Depot is the better opportunity from a technical perspective. We also heard from Brian, Home Depot the better opportunity from a fundamental perspective. And Larry Schober has a bullish options trade that limits downside. He likes the company. Monday on 3 versus Trish. Best Buy is in